Well, thank you. Now, last week, if institutional investors were calmed and cautioned not to make any radical moves, is that word true to average, everyday Americans who are poring over their 401ks these days? Here's Alexis with details.
All right, Peter, if you're an investor suffering with agita this morning, don't worry. After the Bear Stearns debacle over the last few days, you may be itching to reshuffle your portfolio. And what if you're the average American out there, just like me, worried about whether the problems plaguing Bear could trickle down into your commercial bank? Here to talk about what everyone from Wall Street to Main Street should do on a day like today is certified financial planner Matthew Tuttle. Good morning, Matthew.
Morning.
All right, you're here to calm our fears. Tell us, given what we have seen about this Bear Stearns situation, should we panic today as it relates to our 401k or investments in Wall Street?
No, definitely we should not be panicking. Certainly it's a time to play defense with your portfolio, but history has shown us people who panic and sell at times when the market goes down, it's not a good time to do that.
All right, talk about one of the things you and I talked about during the commercial break is whether or not people's assets, particularly in a situation where if you were invested at Bear Stearns, are protected. What are some of the insurances, the protection that many of these major banks and broker-dealers have in place?
Sure. The major broker-dealers have SIPC insurance, Securities Investor Protection Corporation. Protects their accounts up to $500,000 if a firm goes bankrupt and their securities or cash missing. Doesn't protect you from losses, but if anything is missing. Bear Stearns and a number of other firms have gone out and bought extra insurance so that if you've got more than $500,000, chances are you're protected from any improprieties.
And we should also mention for those who now are investing or have their 401k in some of the big commercial banks, they too, if you're concerned this morning, have their own set of insurance. Tell us about that.
Yeah, the commercial banks have FDIC insurance, which covers up to $100,000 in bank accounts. 401ks are a little bit different, where they're held in a separate trust away from whatever firm you're working for.
What do investors have in store for today? Because one of the things people are going to suggest is that by buying Bear Stearns for $2 a share, when we saw not too long ago the stock was $157 a share, that many of the financials in the group may have to be revalued. We see the Dow futures right now looking down 165. What does this mean for the rest of the financial sector? Well,
it really means for the rest of the financial sector and the market in general, it means that we're going to see more panic, more downside, more fear. Thursday morning we had enough to worry about, and then this happens Friday and today. It just makes a bad situation even worse.
You are a private, financial planner. You talk to people every day. When this stuff started to unfold last week, did you see people calling? Were they in a panic? Some people suggest that a panic doesn't really occur until your phones are ringing off the hook. Are your phones ringing off the hook?
Phones aren't ringing off the hook yet, no. And I think a lot of it is because we've been in this since really October, where the market's gone down, down, and down, and down. I could get into the office today and have a lot of voicemails, but last week, no.
All right, so just finally before we go here, what advice do you give people today? They're looking right now, they're a little panicked, they maybe need to reshuffle their assets, reshuffle the deck. What do they do?
You need to be very diversified. You need to, as much as possible, use all weather types of mutual funds, funds that can go up regardless of market environment. You need to have some non-dollar denominated assets, and you need to be in some commodities and natural resources.
All right, Matthew Tuttle, thank you so much for joining us and calming our fears. We appreciate it.
Not a problem. Happy to do it.